Yeah, hi. A very good evening to you. By now, I think this introduction is more of a ritual because most of you should know who am I. In case for the folks who are not aware, my name is Anindya Banerjee, and I take care of the research in the currency and the fixed income, and also on the macroeconomy for Kotak Securities. I advise the clients across individuals as well as institutions on their in terms of the speculation which they can do in the FX market, and also for corporates we do a lot of advisory on the hedging, the risk that based on exports and imports. So say today we have a very interesting topic. It's on the rupee, and the topic is it hot or not? In fact, the last webinar when we did, the topic was whether the rupee is about to bottom, and I would call it a mere say a coincidence that after that rupee has bottomed out at 74.5, and it has appreciated to 71.20 as we speak. So a lot has transpired since our last webinar, and we'll be covering that and as well as the outlook going forward. So without much ado, I'll be jumping right into the presentations. So the first most important thing, the economy, because no discussion is complete on the FX market without the talk on the economy. And before I jump into the economy, let me encapsulate some of the major events. First of all, the US election, which was there. Now, what is this election about? It was the US citizens, they elected their congressman, not the president, because the presidential term is of 4 years. The congressmen, they have a term of 2 years. So, and in that, what we got was kind of a hung house, because now the US Congress is the majority is now held by the Democrats, and the president is from the Republican Party. What that means is that going forward, considering what the US president is, it is Donald Trump, and how controversial he is on his policies, we could expect a lot of political, say, skirmish between the Congress and the president. And the president needs the Congress for the passage of various bills and the laws, like what happened to the last government in India when there was an impasse in the parliament, in the Lok Sabha and Rajya Sabha, and for almost 2 years, nothing got done. So a similar thing may unfold in America starting next year, and that's the reason why we have seen dollar come under quite a lot of pressure over the last couple of weeks, and the rupee has appreciated quite significantly, as I said, from 74.5 to almost 71.20 now. So going forward, because the appreciation has more or less taken out the froth which was there in the dollar. And now all these markets, all these currencies like the rupee and a lot other emerging market currencies, they were quite oversold against the USD a month back. Now that oversold nature is gone. Now the market is now evenly balanced. It's at fair value. So going the path forward is going to be completely dictated by what happens to the economy, interest rates, as well as to the political environment. So first, this slide basically gives you a glimpse of what's happening to the economic momentum in major economies. For example, in the US, what we see is the economy is slowly bottoming out. Now, that's good news, and that's the reason why Fed is quite hawkish. Now, when Fed is hawkish, which means they will be more interested to hike rates. If you look at the Eurozone economy, that is still weak. It is sinking. The UK economy, because of the Brexit uncertainty, it is sinking. And the Japanese economy is also sinking, which means that out of the 4 major economic blocks in the world, 3 are in a downtrend, which is not good for the world economy. So if now the US economy starts to sink because of, let's say, the higher interest rates, stronger dollar, and also the political stalemate which can happen next year, that will be bad news for the world economy as well. But the talk about the world economy is never complete unless and until we touch upon two major economies from emerging markets. They are India and China. And what we see is quite interesting. The Chinese economy, yes, it is the economic impulse is weak, but it is starting to bottom out. But it's again early days because the trade war between America and China is hurting their economy pretty badly. And the defaults in the financial sector is rising. And that's not good news for the Chinese economy. But on the other hand, if you look at India, we are seeing some green shoots and some pickup in the economic momentum. So out of the six major economies that we looked at, Eurozone, UK, Japan, China, America, and India. America and India are the two economies which is still showing a positive momentum, but the other four are in negative zone. So if now these two start to sink, then it can have adverse impact on the world economic growth in 2019. So keep an eye on that. Now this is another slide which gives you a decomposition of that economic momentum. What we see is that there are a number of indicators which are here, which has been compiled on a month-on-month basis, and it shows on a if you look at it broadly, that there is positive economic momentum. It's not that all of the engines are firing, but at least there is overall positive economic momentum. So if this economic momentum sustains with oil prices down, that's a big relief to India. And with now the GST almost stabilized and the effect of demonetization gone, so we expect the economic momentum to pick up in the coming months and quarters, which means that the Indian economy can continue to do well in spite of the weak trend in the global economy. Something which happened not so in the distant future between 2014 and 2015. Because of the global commodity crash, the world economy lost its mojo, but the Indian economy was doing exceptionally well. So that kind of situation may play out over the next couple of quarters. Now, something very interesting. Now, let's look at how the rupee behaves compared to its peers as well as against the crude. Because if you are looking at the dollar rupee rate and looking at it on a macroeconomic or fundamental basis, there are a number of factors which affect it, right? But predominantly, you can classify them into three groups. The two are depicted in this chart. One is how the dollar is doing vis-a-vis the other currencies. So what we have done, we have used the Bloomberg and compiled an index, an equal weighted index of 28 currencies, excluding the rupee, how against the US dollar. That gives us a glimpse of how the dollar is doing broadly. Now, dollar index or all other currency indexes which are available doesn't do justice, because they have a very small basket of currencies, and they have given disproportionately large weight to one or two currencies. So we have taken an equal weight, and that has a very high correlation with how the rupee does against the dollar. That's what we have seen in the past. And at the same time, we have to always sprinkle in the oil, and that's what we see in the oil, that what we see is if there is no domestic risk. When I say domestic risk, let's say a political risk or some kind of risk in the financial sector, if there is no such risk, generally the rupee dollar will behave as per these two factors: what oil is doing, and primarily how dollar is doing against its peers internationally. And with no domestic risk now, yes, elections are there, but that's in 2019. Yes, we have the semi-finals, which we'll be talking about later. But it's not like 2012 or 2011 when the existing political party and the political environment was quite sour. So we don't have a significantly high, say, political risk as of now. And there are no major risk to the financial sector, though there is a risk of the NBFCs always. But at least there has been no bad news in the last couple of weeks. So in that respect, I think the rupee dollar will be largely, the movement will be dictated by what's happening to these crude and the dollar overseas. What we see is crude is giving a lot of breathing room to the rupee, because crude has almost retraced all the gains it scored in 2018. So that's fantastic news. But in spite of that, rupee is not still below 70 for the simple reason the dollar is still holding up against the emerging market currencies, and that's the factor we have to watch. If now the dollar cracks, let's say from next year, due to the political uncertainty, etc., then the rupee can appreciate quite substantially because oil is comfortably placed between say 65 and 70 on the Brent. But if the dollar somehow starts to move higher, let's say the Chinese economy gets into a crisis mode next year, and the yuan falls quite sharply, then we can see the rupee completely ignore the oil and start to move in line with what's happening to the emerging market currency. Because we had seen that in 2015. 2015 oil was at $27 a barrel, right? Below 30. So, and rupee completely ignored the oil and started to follow its peers in the emerging market. Yes, we did less badly against the dollar compared to our peers, but we did depreciate. So we cannot ignore that factor. Always keep that in mind. Now, this is another chart which shows the impact of oil, how it has an impact on the Indian asset markets, the Indian financial markets. Like when oil topped out here, what we see is that the Indian equities have started to outperform the US equities consistently in dollar terms. Now, the same we see here in the Indian bond yields. Now, Indian bond yields largely track, unless, say, there is again some idiosyncratic factors which are there, which may happen from time to time, but it is not a frequent thing. The Indian bond yields largely track what is happening to the oil prices in the Indian rupees, because that captures both the rupee factor as well as the oil factor. And what we see is that based on that parameter, Indian bond yields can fall a lot more. So there is a scope. Now, whether that will happen or not will largely depend on how long the rupee stays here at current levels or appreciates, or the oil stays between the say 60 and $70. If the oil drops below 60, that's fantastic news. But just based on oil and rupee, the Indian bond yields have a scope to fall, which is good news for the economy and as well as for the equity markets as well. Now we'll move from oil India to the global setup, and what we see is that the reason still dollar is refusing to sell off is this: the economy, as we said, is doing well, and that is enabling the Fed to keep on hiking rates. So this is the white line is the Fed fund rate, which is what the interest rate the Fed sets on an overnight basis, and the yellow line is the 12-month yield, which gives us kind of a market's view where the interest rates will be in the near future. And what we see is that when the interest rates started to, the talk of interest rates rising started to happen, that's around 2015, the 12-month US yield started to move away from the Fed fund rate, right? So you can see that as a early indicator. And that has been historically always the case. Whenever and each inflection point in the interest rate cycle, the US 1-year yield has always been the leading indicator. Now we have created a spread between the two, and what we show is that has a huge correlation, a kind of a leading indicator of how the dollar is behaving. And as long as this interest rate expectation is not coming down, dollar will not have a big sell-off. So there are two factors here. One, I talked about the political risk, which is there next year, which is negative for dollar, right? But there is another aspect to this political risk, which is, let's say next year, if on all the issues which Trump wants to work, because he wants to be re-elected in 2020 when he faces the American public in November, immigration, on taxes, on budget, etc. The least contentious issue is trade, because there is a broad support from American public and American media, as well as from across the political parties, that America needs to stop the malpractices of China. And that is just not an angle of trade. There is a geopolitical angle attached to it, because America believes that China is spreading its wing too fast and too much. So that needs to be curtailed. And one of the ways to do it is through economics. And trade hurts China most. So you have to hit where it hurts most. So trade. So one aspect is a political turmoil. Now, if this political turmoil in America prevents the president to pursue his own economic policies, he may just singularly look at trade and go after it to score the maximum gains. If that happens, it will create a negative impact on Chinese economy. It will have a negative impact on emerging markets, and that can ensure that the dollar stays strong. So these are the two aspects which you have to look at. One is Fed, the US economy and Fed. The other one is the trade and the US politics. So accordingly, which one will have an upper hand will decide the next trend of the dollar in 2019. Now, the another factor is the central bank balance sheet. Now, what does it mean? It means that when we have heard about this word quantitative easing, QE, right? So what does a central bank do? They simply go out and start buying assets, generally government bonds, sometimes even private bonds. So that's what the US central bank has done. The European central bank is still continuing to do, but will stop from December. The Japanese central bank does it on an off basis. So these are the four major central banks of the world, from the like UK, US, Japan, and Eurozone. So what has been their activity on expanding their balance sheet? And what we see, there is a nice correlation between how the global equity markets have done and how the balance sheet has increased, because easy money environment is always conducive for risky assets like equities. Now the balance sheet is rolling over because Fed is unwinding its balance sheet, so it's doing a negative QE. ECB has slowed its purchases and it's going to completely stop from December. Bank of Japan, as I said, they are on and off. They have a mandate around the yields, so they may intervene and buy assets. They may not for months. So as a result of which, what we are seeing that the consolidated balance sheet of the four major central banks around the world is now coming down. That's not good news for the globally for the asset markets around the world, especially equities and junk bonds. And what we are seeing is the volatility has started to pick up around the world in all the risky assets, commodities, junk bonds, equities, even cryptocurrency. So this is a major factor which needs to be watched, because if the global equities tank even from here, let's say by 10 to 15% or more, then we can see some of these central banks take a step back, because it will have an impact on growth. You're already seeing that the growth is slowing down, right? So this is another factor to keep an eye on. Now this chart talks about the junk bond, which I just highlighted. What is happening to the Asian junk bonds? Junk bonds means companies who have issued debt with a high risk of default. So when the times are good, these kind of debt instruments do exceedingly well. Like we have seen a kind of a cycle play out in India, right, in the last 3 years, where everybody wanted to just give them any bond to own, and they would have lapped it up like anything because they were all hungry for yields. Now, as the tide has turned, interest rates have increased. We are seeing a kind of the risk of a default play out. We have already seen a couple of them default as well. So what we are seeing in Asia is that the investors are getting increasingly nervous about the junk bonds issued by the Asian corporates, and they tend to have a very high correlation with the Asian equity. And according to where the junk bonds are trading relative to investment grade bonds, it is saying that Asian equity markets have more downside left. That's again not good news for emerging market currency like the rupee. So though we have appreciated it a lot, but these are all things which have to be kept in mind when we are trying to frame the view for the path going forward. Now we'll move to technicals. Let's look at what is happening to the dollar index. Now this chart is not the usual dollar index which you see on any of the channels or on which you have heard a lot. This is the Bloomberg compiled dollar index. The reason being because the dollar index which we see or we come across normally is the 60% weightage is the euro. Now it is as almost like looking at the euro dollar chart. It doesn't make sense. So Bloomberg dollar index does a little more justice. It gives a lot more weightage to Asian currencies and emerging market currency. Even Indian rupee finds a place in that. I think the weightage is something like 2-3% or maybe 4%. The Chinese yuan has the highest weightage after the euro. So this is a much more broader representation of how the dollar is doing. And what we see is that the trend is still up because we are getting higher highs and higher lows. The primary trend line, the red line, is intact. So these are more of corrections which are happening now. So as long as this low around probably October or early November holds, I think the dollar uptrend is intact. But if this breaks, then the trend will be changing. And the first support, the big support, will be this annual average, which is this black line, which is currently some distance away, 3-4% away. So this technically is still uptrend, but the correction has some room to go, but not a lot. But if it breaks its trend line, then, and this coincides with the fundamental factors which we discussed, right? How they are placed between the trade war and between the US political stalemate which can happen, which takes the upper hand. Does Fed blink first and stop hiking rates, or does trade war takes the precedence and for Trump and the US politicians, and it hits the Chinese economy even harder, and the Chinese economy sinks into a abyss in 2019. So these are the things which will dictate the next big trend for the dollar. From there we move to another important market for the rupee. This is the Nifty 500, because Nifty 50 is again it's only if say 50 stocks. We wanted to have a broader index. So Nifty 500, like the S&P 500, gives you a flavor of the entire market, and that's also very interestingly poised, because there is now a tussle point between the bulls and the bears, because this was the point where it had taken support previously and rallied. Now that is there is a kind of say what we call in technical terms a role reversal. A support is now the resistance, and it also coincides with this important trend line which it broke. So if it starts to sell off from here, it would be say bad news for the Indian markets, which coincides with the global setup. And then in 2019 we could see a plunge of another 12 to 14% on the broader market. So keep an eye on that, because it has a bearing on the rupee. And on this is again the global equity market, that again has the structure is bearish. Even a move down to the lower end of the channel here would mean a 10 to 12% drop. So global equities are not looking good. USDINR, technically it's at a very important support around 71. And this is an important support because this is a primary trend line. So whenever you look at a trend, always if you can identify the primary trend, right? It was this was a primary trend line. Then it had these mini acceleration lines. The trends accelerated. But now with this correction, it is coming back to the trend line. The trend line is can be seen from the technical standpoint as of the mean of the market, the average of the market. So it's coming back to its average, or technically the fair value. Now, if it breaks down below 71, then it would mean that it could be doing a move to the other side. It could try and get undervalued now. So in that, overvalued now in rupee terms. So in which case below 71, it exposes 70, a more psychological level, and a level arrived through other technical indicators. And then 69, the big multi-year breakout zone which has there. So these are the important levels to keep in mind. 71, as long as 71 is not breaking, we can say that the rupee has a high probability of bottoming out here and a fresh uptrend could begin. So keep an eye on 71. These are the INR pairs which we trade, the Euro INR. It's again in a channel. It's 1 rupee away from its support, so it's closer to 80 half the support comes. So it has still more a little bit of downside left, not much, a little bit. If it breaks that channel, then it would put this entire uptrend into a big question mark, right? Then we can see much lower levels. As of now, we have to give benefit of doubt to the existing trend, and that is still up. So it holds 80 half, it's okay. If it starts to break down below 80 half, then it's trouble. GBP same thing, though it's not in a proper channel, but still the uptrend is intact, but the correction is becoming quite vicious. So it has still room to fall, considering the trend line is some good 2% away from the current levels. So all these things augur well for the rupee, because if the EURINR has still got a buck down, the GBP has still 1 rupee down, which means the question is which one is going to fall. Is it going to be the dollar rupee which will drag it down, or will it be the euro dollar, pound dollar which will drag it down? But these currency pairs on the rupee are showing that rupee still has some strength left. That may not play out against the dollar because of, as I said, the global equity market, but may play out against these INR crosses. JPY INR is at support. If it starts to break down, then it's a problem. Euro dollar is interestingly carving out a bottom. If it starts to move above 116, it's going to be quite interesting play. And the major events to watch for the upcoming weeks. One are the elections, the state elections in Rajasthan, MP, and Chhattisgarh, because it's kind of a semi-final ahead of the 2019, probably the May elections. So this will have an impact, because in case BJP is at least able to retain MP and Chhattisgarh, maybe lose Rajasthan, it's still okay. But if BJP loses MP, then it's trouble along with Rajasthan. So there are a lot of say permutations and combinations which are there in the state election. So it will have an impact on the rupee. Because in 2015, when the Chinese crisis was on and the Bihar election outcome actually happened against the BJP, rupee had lost almost 1.5%. Generally, December is a month where rupee appreciates. Historically, if you look at it, 80% of the time the rupee has appreciated over the past 20 years. But 2015 was one such month and one such year where the rupee depreciated by 1.5%. For the simple reason, it's just not the Bihar election outcome which had a role to play, but also the Chinese financial and economic crisis which had affected the EM currencies as well. Apart from that, we have the US Central Bank interest rate decision. They are expected to hike interest rates one more time, and the language will be watched. And obviously the US-China trade war, which is very important. And once again, before we conclude, this is a very important slide, because this is something which you need to adhere to while trading derivatives, not just currency derivatives. That is, stop losses are compulsory, and don't average in losses. And the position sizing should not be too large, because one bad trade or three bad trades can completely wipe you out if you don't take care of your positions. A simple rule of thumb to be applied for position sizing is, in a single trade, you should not risk more than 2% of your capital in single trade. That means the total loss that can happen in one trade if it goes wrong should not be more than 2% of your capital. If it is more than 2%, then you are taking too large a position. Don't do that. If you do, then a bad series of trades, which can happen to any trader in the world. The best of the traders in the world have a series of losses. If that happens, you are gone. So keep this in mind. With this, I open the floor to two questions. We already have received a number of questions, and I'll be taking up a few. So the first question which I'll take is, The question that comes is from Mr. D.K. Puchnanda. He asked, what is the level, what could be the level of the rupee by December 11th? The reason he has chosen that date is because that is the date, I presume, when the assembly election results are out. And actually, it could be ranged till December, that outcome. The volatility can happen after that. But here, the big assumption is that the global markets will stay quiet, which I don't think will be the case, because, as I said, 71 is a critical support on the dollar rupee. Now, if 71 holds, now whether it will hold or not will depend on how calm the global markets are. Like the way they were today, we again saw a fresh sell-off in all the marquee stocks which were under the hammer a month back. So which means, and also we saw sell-off in the US markets as well, led by the tech shares. So if that kind of risk and sentiment prevails, then that's bad news for the rupee, clearly. So which means that 71 will hold, and we could probably bounce back towards 72 by the December 11th. Now, if the outcome, depending on the outcome, accordingly the market can react. So you can say it's always an interplay between what's happening in the global markets and what's happening to these domestic issues, which has an impact on the rupee. If I want to put a number to it, if it's an election as important as it is, like in December, then probably you can say it's a 50-50. Means half of the impact on the rupee can come from these elections, and half of the impact on the rupee will come from international factors. If there are no events like this one, as important as these elections, then 80% is because of international factors, 20% is because of domestic factors. So that's how to look at the impact, which I already talked about in one of the slides where I talked about oil and the dollar and its impact on the rupee. The next question is from Mr. Lodha. He asks about, will Trump winning 2020 election make dollars stronger or weaker as per you? How does Fed changing interest rates affect the dollar? Mr. Lodha, 2020 is still far away because we are in 2018. That's 2 years. So we'll come to that question in maybe in a year's time. The next question, the second part to your question, how does interest rates impact the dollar? Generally, when interest rates increase, it makes the debt or the bonds that are issued in that country very attractive, unless there is a political risk or inflation risk. If the inflation is low and stable, and there is no financial risk or a political risk, then a higher interest rates would mean more money will be attracted to come into that country. So it becomes positive for the currency. So you can say, as a rule of thumb, higher interest rates is positive for dollar. The final question which we will take is there any correlation between the exchange rate and the equity index? Yes, there is a correlation, but that correlation, see, the word correlation, there are two aspects to it. One is the direction of the correlation, that is, are they, say, positively correlated or negatively correlated? That's one part. Another part is how strong are they correlated. Now, as far as the how strong they are correlated, that keeps on changing from time to time. There will be times, there have been times, and there will be such times when the correlation between the Nifty and the dollar rupee, it weakens, but they will generally tend to be opposite. Means when the Nifty is rising, it will be highly unlikely for dollar to rise. But we have had such instances in the past, like in 2014 and 15, when the dollar rupee went from 58 to almost 69. The reason being, because when you are looking at the strength of the rupee or the weakness of the rupee, judging that through just against the dollar is a little short-sighted, because we should ideally look at the Indian rupee against a basket of currencies. And that's what, when you use that metric, what you see is between 2014 and 15, when the Nifty went in, actually grew in dips and bounds, Uh, Indian rupee was the strongest currency in the emerging market basket. It was, in fact, the second strongest currency in the world after dollar. So, though we were depreciating optically against the dollar, but we were appreciating against everything else, which meant that every other currency was simply being taken to the cleaners, and we were just depreciating reluctantly. So that is the thing. So when you look at against a broader index, the rupee, and compare it with the stock market, it will generally have a negative correlation, in this case a positive correlation, because a stronger rupee against a basket of currencies will go hand in hand with higher equity markets, and a weaker rupee vice versa. But the strength will keep on changing depending on the context. So with this, we conclude this webinar. We hope that you got the information that you were looking for, and we'll be coming up with say more webinars in the future. And thank you all for attending.